All right, so I'm in the forest. I just thought I would make a quick video explaining what I mean. So you're gonna see me getting pissed off at bugs and flies and stuff like that, but it is what it is. So with the stuff that I'm talking about today, the way it happened was all these events occurred yesterday in the White House. They occurred yesterday. And then today, at certain times, very specifically, certain pieces of information came out. The first one came out, it's all regarding the Powell bullshit. The first one came out and quick drop. Build back up because it seemed like no big deal. Half hour later, next drop. Boom. Bigger, harder. I mean, from where I had my fib drawn, it came down pretty much to the level of 6240 ES. But that's just because of the structure of the market. So that's not the point. The point is the next piece of news came out right at that level. Boom. There you go. You continue to move up. You know, the bullshit is they released those to the media at very specific times, which all lined up with key levels on the chart, key resistances, worked out perfectly. That kind of blatant interference, manipulation is insane. So the reality is, at the time in which things happen, the sequence in which they happen don't really seem to matter. At the end of the day, everything could be a lie anyhow, but the market doesn't play what the lie might be. The market plays what the hand being shown is. So I just didn't appreciate the way that happened today. So it's just irritating. It makes you like I was away for the second half of the day, pretty much. So I was not overly invested in making that happen, but that's what it looked like it was going to happen. It just, you see the bullshit happen when it drops, and then you see the way the structure holds, and a few more buyers come in. Nothing changed. There you go. And now you cool down certain things. You let certain bands catch up. Now the market's ready to potentially continue with this type of momentum it showed today. Don't ever act like you know more than all the people combined, because the reality is literally anything could happen at any time. Okay? You keep it technical like we do. You follow the rules of fibs, and you can just see it's doing the same thing over and over. A little bit of sideways, pop up higher for a next zone, mess around in there for a week or two, and continue the show. Names are doing it, indices are doing it. So we should not be surprised at it. And until certain levels actually get broken with follow through, like unless you're just doing quick scalps. Sorry, I'm chewing gum. I don't see the realistic reason why you want to risk being the first one to short a really strong name that is proven every single time to have a dip being bought. It makes no sense to me. You can, again, if you're quick and you know what you're doing, boom, boom, in and out. But you're playing a risky game that might not even be worth the time based on what you're actually making on it, unless that's your specialty and your type of trade. Okay? Take what the market gives you. Follow, if you're looking for weak names, follow the weak names, and you can short those. If you are trying to short strong names, it's a recipe for frustration if you misstep. Okay? Anyway, aside from that, I would just look for those things to happen. See where the volume is, see when the name makes a new high, see how it consolidates over a week or two, and the most likely outcome is that it just does the same thing again at a level higher. That's been the market for the past little while here, and I would say once the summer, which we're already kind of pretty much midway summer, but while it's still lower type volume, I think this is what the playbook's going to be, and it could change at any moment. Tonight we can get a bombshell headline and all the people who became bulls again today get stranded. The only reason I think it doesn't happen is because now the market sees the opportunity at the technical aspect of the charts are providing. And that's how I base my mentality on trading. It's like if there's an opportunity for it to run in a moment when there's reasons to support the bullish sentiment outside of the people saying, oh, these stocks are running too high. People don't understand that's not a negative thing. When people are talking about stocks running so hot and running so high, it's a sign that there's more demand because more people are involved or interested. Like, oh, hang on, that stock. They don't go tell a person that something is worth 200 times its price to earnings ratio. You think they're going to understand what that means? Most people don't understand all the particulars of what that means. But you understand that it's, there's a certain amount of over embellishment in certain aspects for the expectations of this particular company. But the average person who's buying it, and traders too, they just see shiny object, and that's the one. And the more people complain about how overvalued something seems, this thing gets a little bit of good news. Palantir as an example. They never said they had like a $25 billion contract. Nah, most of the ones I've seen are in the millions and government, whatever. But nothing that supports the dollar value based on what they're anticipated to make revenue-wise versus what they're actually reflecting in the stock price as to the company's value. But again, if you went with that mentality, where do you stop? Like, you would have missed everything in Palantir. You would have missed definitely the most of the move because their ratio has been bad since they were at even when they were at $7, I think their PE was bad. So that's the entire point. If you come at it from that perspective, then you're going to probably just focus on too much shit that's going to keep you away from even noticing what's happening in some of these names. Like, the market will use the opportunity that it has. That's just how it happens. That's how it works. Resistance, support, it plays within those levels, zones, fibs, key fibs, whatever it is. Some charts are a little different. Some respond better to, I think it's all a matter of who is playing them or which programs are set up and playing those, because some of these names play the exact same way, but they have their own specific zones of resistance, which likely indicates maybe where the big players involved have positioned themselves, or whatever the reason might be. I don't try to think about it too much, but you can see it in the charts. So some of them respect certain fib levels. Some of them, it's a particular price or a volume spot that becomes like a magnet for a particular stock, but they all seem to have something. So if you chart them right, you can identify these zones, identify the trend, and then essentially make your plan for the stock. There's a lot of exciting stuff that happens every day in the market, and that's what you maybe want to just scalp. Like, trying to time some of these pops, unless your time horizon is like, I want to hold this for 5 years, 10 years. Okay. Then, you're basically rolling the dice on anything, in my opinion. But definitely these names that are running like 20%, 30%, 40% in one day, that's not, unless you're in prior to those pops, you're in a position to hold on to them or a portion of them and let them run, sure. But getting in thinking it's a long-term plan once a name has been, hot for a week and it's run 100% over that course of time, you got to wait for it to build a zone and then pop in. You can't just get in at the first time one of these names just pops, because there's very little known about them. Some of these are small market cap. Some of them, the volume's not even that good. So if you think about the dollar amount traded, so 1 million shares at $3 a share, it's $3 million compared to the billions and billions of dollars traded in other companies and in the indices. So when you think about that, it's how many people are you playing against and how much they need to win, or how far do they need to take this. If they're just doing a day trade, maybe they're just looking to burn somebody who's a late buyer. Who knows? You don't know. So you have to be, in my opinion, choosy with the types of names that you are going to roll the dice on to hold. So you want more liquidity, ideally something that's tied to another company who's possibly hyped. And that's when you can get these nice little swings going. But just trying to buy and hold some of these names that have these massive moves after consolidation, in the past, many have failed. This time looks different in some of them. QS is an example. But you have so many more opportunities for these types of moves to start playing out in names that I consider the laggards, like PayPal and those types, kind of like what you has been doing. Sophie, they're breaking these long-term areas, and now they're sorry about that. I think it was a mosquito that flew into my face. Now they're actually pushing to go on a long-term uptrend. So you have to see how these things play out. Again, the lower amount of dollar value traded per day, in my opinion, is the least amount. Here, hang on. Take a look at that snake. Yeah, off the path, buddy. You're gonna get eaten by a bird. Go. Anyways, so the less money traded in any individual company means, in my opinion, more of a chance of maybe definitely less demand, which is going to keep prices lower, but also the possibility of somebody just getting bored and saying, you know what, I'm going to move it over to something else. But there are a bunch of good setups. Like I'm never at a shortage for saddles. My issue is I see too many good things. So I try to like focus on a few of the mega caps at a time. When I like what momentum they have, I like to focus on certain small caps. And then I have my list of like certain hype names, you know, and I found some good scalps in some of the uranium names. But again, that's just what I see that's hot at the moment. You don't need to look at as many things as I look at. I would say just find a couple in each type of, let's say, specific type of play that you like to play, and load up some names instead of trying to look at like 40 different charts. You know, kind of keep it simple. That's why I don't mean to ignore anybody on certain names. There's already so many, and I'm just not going to look at all of them. Like, I'll look at it when you ask me to, for example, but I don't normally care so much. Not because it's not such a good play. It's just that I don't have any more bandwidth that I want to dedicate to other opportunities when I already have more opportunity than I could possibly use, you know? And I think that's just a matter of that's just how I am. I need to know a certain amount about what's going on in sectors, but then when it comes to certain names, I'm only looking at, you know, a specific stock for this period of time. And that can change from week to week. I write down some names at the beginning of the week that I decide to put more focus on. I know there's names that are also within the sector of some of these names, and I'll talk about them and I'll use them for relation, but I would not play I would not play 5 names in one sector that's hot right now, not for short-term trading. So I think that most people are, I got these flies in my hair. I think most people are in a kind of a similar mindset when it comes to those things. All right. And I'll actually see, I just been so, I think it's douchey to like try to make videos for clout. So, but I actually might make a video about just how I try to keep my charts simple and the few things that I look for and use. And again, you could use so many different things on a chart, but at least for the way I'm looking at it, maybe you'll understand what certain things mean on them. I think they're pretty simple and straightforward, but I just put the indicator or the pattern that I see, or patterns that I see, the scenarios that I see, and which ones I can see the most ability to kind of continue the price structure. So that's what I show sometimes. It's just basically, if you see like a trend line down, obviously, yeah, you're looking for a pop over the trend line. If you see, a neckline on a weak name, it's possibly a head and shoulders or a wedge, whatever it is. And you don't have to be calling it up or down. You're defining the areas of support and resistance, and you don't have to guess. You start to see which way it goes. Okay, put your chips on the table. Looks like it's breaking bear, bull, whatever the hell. Nothing is perfect. There's people playing on both sides of everything. All angles covered. So you take a chance at probability off of a setup you like. Great. I really keep it simple. I don't only use one thing. I make zones and I use some anchors, and I like to know kind of where we are on when it comes to a fib level on multiple time frames. I like to have it on, from the previous significant low to the most recent high. But I also, depending where it is on the chart, if I'm near a 0.5 or one of the GPs, and yes, I say GP to whether it's reverse GP or GP. It's all a matter of the defined zone, defined range, and then how you draw your fib inside there. You know what it is. It's just easier for communication purposes because we get similar reactions. Whether you're coming down to a GP or you're going up to a GP, you are getting a reaction most times in most scenarios. So I just do that for simplicity. And that's it. That's pretty much all I use. Clouds are nice at certain particular times. Maybe if it's matching like a consolidation period, or maybe it's just in a price structure that seems to fit a cloud. But like most of these names are beyond their clouds on a daily time frame, even a weekly time frame. So those don't even come into play right now. Okay, so that's why I don't even use those types of indicators. I just try to keep it as simple as I possibly can. I like to see sometimes just for zones, I'll use the volume profile on the right side of the chart, but I don't use that very much. Sometimes it just gets stuck on there. But it's good if you're looking a little more long term to see where you're most likely gonna find support or resistance. It does obviously work itself out. But beyond that, no, I use volume and draw zones, certain patterns or certain trend lines, and that's it. And you might see like horizontal lines on my chart. I keep those there usually just for either a key level, obviously, or just for an alert. It's usually just an alert that if I want to know when a certain price gets triggered or we reach a certain level, I like to be made aware. So, and I just don't bother to always. I don't like to post charts that are messy, but I don't bother to always clean them up. All right, so yes, I'll look at charts, guys, but remember, I'm looking out for myself first and foremost, obviously, but I also do provide quite a bit of, I think, high quality action for the names that are most hyped up, most money going into them, so, and I don't look to like immediately reverse a strong trend. So I'm less interested in that sort of a mentality when I'm thinking of a low probability, low reward, high risk scenario if I'm thinking of quickly shorting a very strong name. So I don't have a deep interest. If I see a good opportunity, sure. If it's like, man, look at how overbought we are, like it's just the trade, if the trade appears. But if the trade is not appearing imminently in that moment, I feel like it's a waste of time to stock a trade that doesn't happen very often compared to all the opportunities that are better in the market. So that's what I try to focus on. I got some stuff that I keep on for longer periods of time, and some stuff that I say, hey, this is good for an hour, good for a day. You know what I'm saying? That's all. I want to waste less time on that stuff. Just, again, if it's a good opportunity and you have a reason for it to be a good opportunity, hey, check this out, man. Look at this level, this fib, whatever it is. Whatever the good reason is, state that, But aside from that, if it's not there, it's not there. Anyway, that was a long rant in a less than glamorous setting, but not always sunshine and rainbows, as we know. All right, have a good one.